a lot of interesting things to talk about. Bitcoin, of course, pushing up slightly. We're going to also mention that very famous CME gap, which we have been targeting for a while now. And then, of course, Bitcoin, looking at what it has done in the last cycles and giving you my valuable insight. So without further ado, Bitcoin right now. So first of all, Iran. Iran has responded to the US 9-point plan for peace with a 14-point counter proposal. And some of the key demands that they have from the US is, of course, guarantees of non-aggression, withdrawal of US forces from Iran's periphery, release of Iran's frozen assets, payment of compensation. Now, this is going to be a lot of money that they're going to have to, the US has to pay to Iran for compensating all the damages they've done. And I don't think the US will do that actually, because that will admit defeat in some sense. And of course, they can't afford to do that. They have so much inflation. Full ceasefire on all fronts, including Lebanon. I think that will be fine. And a new framework for the Strait of Hormuz, which, let's see, I think that's also a difficult talking point, because of course the US does not want Iran to profit from future trade happening through the strait. Now, what has happened to Bitcoin? Bitcoin has gone up slightly on the news. This is the candle to look out for. And we can see it has a high wick to the upside, but it has then gone back down. So Bitcoin has gone up and then closed the candle back down, which suggests that the market is not really believing this counter proposal for peace, and things potentially that things are not over yet. Now, of course, when we look at Bitcoin, the point to look out for is, first of all, $79,400, which is this previous high if you look here at the 4-hourly, which we have now touched 2 times and is our most next price target, which Bitcoin is, in my opinion, most likely going to hit. So that's not really high. That's like $800, $700 above the current price, which can be hit overnight. Now, if I zoom out a bit, of course, Bitcoin has another target, which is here. It is the $81,000 region, which is from the previous bear flag, the low right here, the low from the previous bear flag at around about 81,000, which I think is potentially going to be hit. And I think it could be hit tomorrow, because I will tell you guys, on the 4th of May, Bitcoin always crashes. At least that was the case the last few times. So what I think can happen here is that, of course, we go along the top, reach the 79,400, and then reach the $81,000 region. Potentially, of course, go also to the previous range low here at 85,000, but that's quite a way to go. And especially given that Bitcoin usually dumps on the 4th of May. And let me try and show that to you guys. Here you get the red lines. Look at the red lines. This is the 4th of May. You can see here 2 cycles ago, we crashed on the 4th of May during the bear cycle. Last cycle, we also went down on the day, on the 4th of May. And now, of course, the 4th of May is tomorrow. So I don't think we have enough time for Bitcoin to go to 85,000 before we go down on the 4th of May, if that, of course, happens again. And next thing to talk about is Bitcoin on the daily chart. If we go here on the daily and we look at it, one sec, we look at it here and we'll add the relative strength index, we can see that we have a bearish divergence. And we know that bearish divergences usually mean that the price of Bitcoin goes down. If the RSI, you can see here the RSI is downward sloping, here we go, and Bitcoin is upward sloping, it usually follows the RSI, and eventually it will also break towards the downside, which coincides perfectly with our target here at around $81,000, and then eventually go to the bottom of the bear flag, like I always mentioned, at around $71,000. Next thing to mention is the funding rates for Bitcoin, because these give us a good idea of whether people are bullish or bearish. So if the funding rates, and you can see they're right now, one sec, they're right now positive, you can see the green. If they're positive, that means there is more long positions open than short positions. So more people are bullish and think that the price will go up, compared to people that are bearish and think that the price will go down. This means that if the funding rate is positive, it means that people who have a long position open, who think that the price will go up, are paying a fee to the short position holder. So if you have a short position right now, you're making passive income basically from these long position holders who pay the fee. And this is basically done to kind of balance the market out, so that if too many people go long, the fee goes higher, and eventually this will also be a reason why people will then start shorting again. So usually if it's positive, it's an indicator that eventually it will go back towards the downside. And we can see that most people are bullish right now, basically. That's what I'm trying to tell you guys. Most people think we will go higher, while in my opinion, it is dangerous to be bullish right now, especially at these levels where we are at crucial resistance. It's very dangerous to be bullish. And we can also see here the funding rates, every 8 hours they update. And we can see here for Bitcoin on Binance, the funding rate is 0.00182% every 8 hours. So you pay this 3 times a day, you pay this funding rate if you have a long position open to the short position holders. Next thing to talk about, and this is very interesting, and I want to dive into this a bit more, is the liquidation map. Now this is not a heat map. The heat map I have shown you guys before, it looks like this. And the heat map, I usually look at it on the 2-week time frame, just so I can have a broader idea spectrum of what's happening. And once the chart loads, I can show you guys. It basically tells you where do people get liquidated. So we can see there's a lot of liquidations happening here at around about $80,000, $79,500, meaning we're most likely going to reach that level. And I personally think we are going to go towards that $79,400 region, and then of course potentially $81,000, but we don't have that many liquidations there. But most certainly the $79,400 region, which now I have so many things on my chart going on. One sec, let me delete this. But that price is of course here. It's of course the previous high, right? And now back to the liquidations. What I want to show you guys, and this is very interesting. If you pay attention closely, you'll understand this very nicely. Let's look at the liquidation map. And this map, looking at it for the last 30 days, just to get a good idea, tells us at which price point people get liquidated. But what most people on YouTube don't show you is that, look, we have different levels of leverage. So let me remove all of these. It will show us, of course, people with 5x leverage, where do they get liquidated? People with 100x leverage, so a lot more risk, where will they get liquidated? Well, let's start with the 100x leverage. That is extreme gambling. And these are not smart investors. These are people who probably don't know much or don't know anything about crypto. And they just think, okay, Bitcoin's price will go up tomorrow. Let me go 100x in, super risky. And of course, the liquidation price at which price the positions get liquidated is much closer to the current price, which is this dashed red line. While if I just show you guys the 5x leverage, it's very less risk. These liquidations will be further away from the current price. So there's a lot more room for the price to move before they get liquidated. And what can we see? Well, we can see that most of the 100x leverage people, the liquidation is on the negative side. This means that they have a long position open. So they believe that Bitcoin goes up, and if Bitcoin goes down, they will get liquidated. So we can see that most gamblers basically, and I can remove these because these include everything, most gamblers are long right now. They think that Bitcoin will go up, and that's a risky thing. It should tell you guys all that you need to know. If you don't really understand Bitcoin, you will put 100x leverage and say Bitcoin will go to the moon, and this is not going to happen. So never trade with more than 10x leverage, in my opinion. Let's go to 50x leverage. Still delusional people, still people who are gambling. Anything above anything above like 20x leverage is just gambling. And you can also see most liquidations are below, most people are long, but there is a considerable amount of people who are short, because once the price goes above the current price, they get liquidated, meaning that they actually have short positions open. Let's go into the 25x leverage. You can see it's more balanced. This is like 50-50. And then going into the smart people, smart investors with 5 or 10x leverage, we can see that most of the liquidations are above the current price, meaning that most people with 10x leverage are short right now. They believe that Bitcoin goes down, as they will get only liquidated if Bitcoin goes up. This is what it shows us. Looking at the 5x leverage, there's no liquidations right now, no significant liquidations on this chart, which are on the downside, meaning everyone with pretty much 5x leverage is short right now, and they will only get liquidated if Bitcoin goes above the current price. And this should tell you, like I said, all that you need to know. If you're smart with your money, you're not going to go in huge risk right now that Bitcoin goes up, especially given that we are right now at crucial resistance. I mean, you're crazy if you're gonna open a long position at this price. Why would you ever open a long position? And let me remove the RSI at resistance. Guys, at resistance, Bitcoin gets rejected. So most likely it goes down. So what you have to do is at resistance is open short positions, if you of course want to trade, which I personally do not like to do. I just like to invest long term. And nevertheless, let me tell you guys. So that's why of course we can see that most people right now have, this is what it tells us, short positions. And okay, enough for that. I think you guys understood the topic. Back into Bitcoin. Bitcoin has a CME gap open right now. It is all the way up here at $84,000. This is the gap that was formed over the weekend between, this is the Friday close and this next candle is the Monday open. Over the weekend, Bitcoin went down significantly, like how much is it? It went down, here we go, $6,000, 7% over this weekend, which was on the 30th of January, I believe. Yeah, 30th of January until 2nd of February, that weekend. So 95% of the time, these CME gaps get filled. It doesn't have to be filled right now, but eventually it will get filled. So personally, like I said, I think we're gonna go to like $81,000 and then go down on tomorrow or the day after, because usually after May 4th, Bitcoin goes down, like I already mentioned. And last two things to mention is that Bitcoin has never closed 3 consecutive months in the green in a bear market. Let's look at this. Look at these red lines. This is all the bear markets, right? We have 2014 as a bear market. We had 2 consecutive months of green positive price movement. And then of course, many negative months because we're in a bear market. If we look here at the last bear market, we had also only 2 consecutive months. And right now, May is positive. Of course, only 2-3%, but it is positive. By the end of May, I'm pretty sure that we're going to be negative, especially we're at resistance, and looks like we're gonna create one more leg to the downside. So this is another indicator that most likely May is not going to be positive. It's going to be a negative month. On top of that, we have the famous slogan, which is sell in May and go away. And this is because most institutional traders don't trade now because there's summer holidays and they don't really trade much until October. That's why the slogan sell in May and go away. Final thing to note is that if you look at all the last bear markets, we can see that usually there's between 9 to 10 red candles on a monthly basis during a bear market. So around 9 or 10 months in a bear market are negative, price goes down. And right now we had a total of 5 negative months, and of course now 2 positive months, and May is forming right now also positive, but most likely will turn negative. This just goes to show that most likely we're going to continue and reach around about this level of 9 or 10 negative months, as we have always done in the past, just to show you guys the bear market is not over yet. And on top of that, final thing to note, like always, the bear market usually lasts for a full year, 365 days. If you look at the last cycles, the first one, it lasted almost 400 days. Then after that, 365 days, 365 days. And if this cycle is the same as last, which it most likely will be, it will bring us to approximately October 2026, where we will see the bottom of the bear market. Hope you guys enjoyed that video. I love making these videos. Smash that like button. See you guys tomorrow. Bye.